today's market action with our market panel, Tom Lee of Fundstrat and Jose Rasco of HSBC Global Private Banking and Wealth. Good afternoon to you both. I mean, it was a record week for the S&P, the Dow, and the NASDAQ. Even though we slipped here in trading for the Dow and the S&P, just the fact that we did reach new highs this week. Tom, I will start with you. How much of this is Fed? How much of this is ongoing AI enthusiasm? How much of this is economic data that continues to surprise to the upside?
It's all of the above, Morgan. It's always a good sign when not only is the S&P 500 making a new all-time high and building on 4 consecutive months of gains, but it's coming when the other important indices like the NASDAQ and the Dow confirm those highs. I think we got a lot of good economic data recently. The economy is very resilient and corporate profits have been also surprising to the upside. But now we have monetary policy that is confirmed to be dovish, and at a time when there's $6 trillion of cash on the sidelines. So to me, these are all positive signals for stocks to make further gains. And I think sentiment continues to be overly cautious.
Okay. Jose, how do you see this, especially as we have seen market leadership broaden out as well? You've now got something like 80% of the S&P 500 constituents trading above 200-day moving averages. And we did get not one, but 2 strong IPO debuts in this market this week, too.
Yeah, look, we agree with a lot with what Tom said, but I think if you look, the cyclical side of the economy is probably going to slow because rates are high. And even if the Fed cuts, rates are still high. So the cyclical side, we should see some slowing. But you've got the 4 underlying secular themes that are going to continue to drive the economy upward. And we think multiples out and the market upward as well. So we're still bullish on U.S. equities. And remember, 94, 95, at the beginning was a couple of stocks that led this whole thing on the tech side. And that broadened out. And we have not yet seen the power of the productivity gains we're going to see here from AI and a host of other technologies, right? And I think that has yet to happen, and that's going to help boost earnings as we go forward, and that's positive for markets. So yeah, we're bullish as well.
Okay, so Jose, when I hear you talk about cyclical parts of the market, maybe perhaps slowing here. I mean, we do have industrials trading at a record high, materials, some of these other more cyclical sectors. Does that mean that you take a step back as an investor right now and say maybe take some profits, maybe put your money to work in other parts of the broader market?
I think you're going to see that just from a valuation perspective, right? Growth has outperformed value dramatically this year, right, year to date, and I think that's going to factor into people's decisions. You can dollar cost average your way to some pretty good stories in other sectors, but the growth perspective remains in place, and we think that's where you want to be. Remember, look at the Philly Fed from yesterday. The top line number was not great, but if you look at prices paid, came down a ton. New orders soared. And most importantly is the Philly Fed CapEx index. And that's something that for Tom's ideas and mine is crucial because it's telling you corporate America is still investing in long-term planning to build a more resilient economy. And they want to make sure they're on the front burner of that, not at the end of the train. So I think you're going to continue to see that. That's going to help lift valuations. But clearly, there's going to be some rotation of value here as growth has outperformed dramatically. And small cap as well has an opportunity here.
Okay.
In our funds.
It's like you took the words out of my mouth, Tom, because I know that you're bullish on small caps. You came on the show at the end of last year, beginning of this year, and you said, look, we see potential for 50% upside in the Russel 2000. I mean, Russel 2000 is now trading. It had a strong week as well. It finished this week up 1.7%. We're now trading at levels that we haven't seen in 2 years. Do you still stick by that thesis? Is there still room to run, especially if you do see a Fed that at some point later this year begins to cut rates?
Yeah, I think the small caps is really emblematic of like the kind of investment you want to make if the Fed is turning dovish. Because number one, as monetary policy eases, well, CEO confidence is going to go up and capital spending should accelerate. That's a lot of cyclical earnings for the Russell. There's a lot of financials exposure in the Russell 2000. So as the Fed is cutting rates and interest rates could fall, that's really positive for the financials. And there's a pretty big tech component as well, but it includes biotechs, and those benefit from falling rates and easy money. So, I mean, to me, the small cap kind of captures a lot of things that can go right. And the PE yesterday, the PE's at almost a 22% discount to the S&P. On a price to book basis, it's at 44%. It's at 44%, so it's a 56% discount. That's a lot of room for multiples to expand, especially if rates are falling.
Okay. Jose, we also saw a lot of buying in bonds this week after we had seen yields start to creep higher. That reversed itself. Is fixed income compelling here, or do you really put more money to work in equities since the market more broadly, or investors more broadly, are so risk on right now?
Well, look, you have to take into account the auction calendar, right? And what is going on. We're reissuing about a third of government debt in the next 12 months. So there's certainly something to be said about calendar and what does that do to volatility in fixed income and equity markets. And that's going to be a factor. If you remember, October, November period, rates backed up for a variety of reasons. One of them was government spending, and one of them was the auction calendar, right? So we expect that to be a factor here in April, no question about it. So you could see yields back up a little bit, but the long-term direction is still down for fixed income, the curve becoming more positively sloped. And as Tom mentioned, these things are very positive for equities, especially a positively sloped yield curve, positive for financials. And if you look at small cap, the one thing I would focus on there, in addition to the things Tom said, is I think we're going to see a lot of consolidation. We're seeing a cyclical shift, and we're seeing a secular trend in economic activity, especially around tech. And you're going to see large companies gobble up small. I think this is going to happen in many sectors, and that M&A opportunity is there. So look for them to gobble up some of those companies where valuations look attractive. That's a great way to grow, right?
Okay, we'll be watching for it. Gentlemen, thanks for kicking off the hour with me. Jose Rasco and Tom Lee. My thanks to you both. In a week where the Dow and the S&P 500 are just finishing their best week since December, the NASDAQ